Well, shoot, David, it is super nice to have you here. I know I'm excited to have you here. I was excited enough I made a post about it, and there's other people that are excited you're going to be on. So thank you for being here, dude.
I appreciate coming on. And you didn't send me anything in advance. So that means this is all cold questions and fresh responses. I don't know. You're going to rake me over the coals. We're going to see how this goes.
Yeah, that's how we like to do it. The whole point of this is less, hey, let's have a sermon on life insurance, annuities, and financial services. More, let's get to know the person behind the professional. And that's really what we'd love to do if you're open to it.
Bring it on. Let's see how bad the hot seat gets. So
I have a question, David. Is there any relation between you and the Kinder brothers?
everybody asks me that question. So it's a great question to start off with. As far as I know, there is no relation with me and the Kinder brothers. And in fact, when I first got started in the life insurance side of the financial services, I got their new agent success kit, and I was not happy with it. So I'm not only not related, I'm also not the biggest fan, unfortunately. So that's a little interesting. In fact, I've made plans at some point. I'll write a book and I'll say the new agent success kit for the 21st century, put my name after it, and just kind of co-opt the title. Because what are they going to do? It is my name. It's not like they cannot claim their name that only belongs to them. So I have some devious plans for that someday.
Okay, so not related to the brothers. What about the Kinder chocolate eggs? Any relation to those?
No relation to that. No relation to the Kinder spices and sauces. And there's another
Kindergarten?
No. And my kids are definitely old enough. We're not in that stage anymore. And I'm also not related to George Kinder of the Kinder Life Institute. I think that's what it's called. I am connected with him on LinkedIn. And every once in a while, I'm like, really, George? But whatever. I leave it as it is. So no, I don't have any inheritances or anything along those lines. Didn't happen.
Well, that sucks. I guess you're going to have to go back to work, right?
Yeah, exactly. I got to make my name some other way.
Yeah, well, you're making quite a name for yourself. You're probably, in my opinion, one of the more prominent people that's up and coming in the insurance space and really starting to have, for lack of a better term, a coming out party here. But
What they call that now?
it's 2025. There's a lot.
I'm in California. We know what that means.
Yeah. So there's a lot of up and comers, but in my opinion, there's very few that are praiseworthy. I think that are out there giving value without expectations, that are truly seeking to help the industry. And that's one of the things that's always intrigued me about you. You're a wealth and you're a freaking encyclopedia. And then on top of that, you're very well connected and you're trying to share 100% of it with everybody else all the time. I think it's pretty incredible.
Well, thank you. It is all self-serving in my own way. It all comes back. And I mean, let's put it this way. Murphy may have been my dog growing up, but Karma was literally my grandmother's name. So I truly believe in karma. Karma's working for me, working overtime for me in the best way. And I know that when you give, givers gain as well. It all comes back around in some other way, shape, or form. And I won't say it's all monetary, but it's definitely produced a lot of connections and a lot of influence with so many people I've connected with. I cannot imagine the circles I'm in. It is mind-blowing. The journey, especially over the past 5-6 years, just amazing. And I just remind myself, I'm humble about it. At least I like to think I am. It's not about me. I try to share as much as I can because I think back to who I was when I first got started in this business and I was completely lost. And here's the thing. When I got started on the life insurance side, I already had 3 years experience on the investment side. I had my Series 7, 66, my insurance license, and I finished my CHFC designation. I got started in a mutual insurance company thinking I'm a sponge. Just teach me everything I need to know. The only thing I didn't really have was a pre-built network. I did not have necessarily a message to get out there. And I'm also thinking, if you really want to show your value to me as a new agent in the agency, show me why you're worth me bringing in my friends and family. Until then, give me the skills, give me everything that I need. And I fell flat on my face. This was December 2007. So we know what happened the next year, 2008, and everything kind of fell apart economically. And it also happened to me as well personally. I got a divorce because of this business. That's how badly I fell on my face. And unfortunately, either my mindset was at fault, lack of training and understanding might have been at fault. I like to think that I'm a good student, that if someone was willing to actually teach the right things, that I would have taken it. I actually had the first couple of months, one of the past presidents of $1 Million Roundtables was in our agency. And I figured, you know what? I'm not just brand new. I've proven myself that I'm serious. I get the CHFC. Can we go to lunch? And we did. He didn't pay, but that's okay. And he gave me a little bit of insight. And at the end of it, I'm like, if that's what it takes to succeed, there's a problem, because it seems so, I can't even think of the word, but it's so staged, kind of fake, a little bit of an act. I'm like, really? That's what it takes? I'll give you an example. In fact, there's an NPRT video with him talking about this. He talking about disability insurance. He take his business card, put it upside down, and say, write down the names of 3 people that could help you pay your bills if you got sick or hurt and you can't work for at least 6 months. Now, everybody can usually write down 1 name. They might struggle with the second, but they might think, okay, I might be able to do something, but they never get to 3. And he said, I know a guy. He turns the card over. I'm like, okay, that's a little gotcha a little bit, but I'm like, that is not consulting. That is not planning. That is not advice. That's a gimmick. And if there's anything that I can't stand, it's gimmicks. I hate being greedy. I hate being needy. I hate being creepy. Give me something that's sincere. Show me how I could be of service to someone else, that I can be looking out for their best interest. And in so doing, I could take care of my interests at the exact same time. And if you can show me how to position myself that way, I'll do it all day long. I found some language that helped me with that. And we had our sales training on Wednesday mornings. And I got this from Burt Mizell. He used to write for the back cover of, I think it was either Advisor Today, for NAFA, Advisor Today, or the Life Insurance Selling Magazine. It was one of those. And he had come up with something called the 5 Ways Out of Business. And but I still love this language. But I shared this, and the GA said, no, that's terrible. What's wrong with it? I like being bold for the benefit of the client, for the benefit of the other person. Here's the 5 ways out of business. Mr. Owner, you're in business today. One day you'll be out of business, one of 5 ways: death, disability, retirement, voluntary sale, or bankruptcy. My job is to help you exit your business with a maximum profit for you and your family. Now, I actually used to make phone calls. I would cold call businesses, and even when I had the guts, walk into business owners' doors and try to use that language. The problem is, when I actually set the appointment, I showed up and I realized I didn't know what I was going to do from there. I didn't know how to have structured conversations. I did not know how to lead with proper questions to help people understand the decision-making that they've already made. I never understood some of these things. There's so many little nuances that once you've got this mindset dialed in, the business is so much easier. But until we have that mindset put in there, and once we know how to think properly, and we're talking about not what to think, but the principles of proper thinking to become a great producer, until you have that, you're going to be lost. And you're going to be dependent on leads and everybody else's words and trying to find some other new selling system. Everything has a place, everything has value. But until you find your own voice and you find your conviction behind that voice, you're going to struggle in some way, shape, or form. You're not going to reach your full potential till you find that voice.
It's funny you mentioned that. You just mentioned so much, and there's so much to unpack. Like, you don't like being creepy. I agree. These people that talk about doing kneecap to kneecap appointments, I think I just get this perverted thing in my head, like, your scabby knees and their scabby knees. I'm like, can we just say face to face, for Pete's sake? My hell.
Yeah, belly to belly does not always look right. You could think of with AGT, you had those 2 guys that did it was terrible. I don't give you any more visuals there.
I'm out. I don't want the creepy stuff. But it's funny. I was just talking with Suzanne, who, was with NAFA for quite a while, and was chatting with her this morning. And we actually brought that same thing up. She's working with us on a few things here and there. And
Nice.
I was like, man, this is phenomenal. I can't believe how quickly you're moving through some of this stuff. We've got some other folks that have been with us a while that really struggle. And we got talking about that. And, her sentiment was, well, I think it's something you're just born with. Like, you can know all the things, you can know what to say and how to say it and all these things, but there's still this just piece that unless you actually deliver it in the right way, so you can have the most intelligent things on earth to share with folks, but unless it's delivered effectively, communication is a moot point in the first place. And it was
part of it. One of the things, I was doing it for NAFA. I've given a couple of presentations, not on the stage, but I've done their virtual for their advisor ambassador program that they've got. And I was doing some research on how different agencies recruit. And one of them, I found a listing for an agency manager. Let's see what their job title description looks like. And it says, find and retain talent. I'm like, what the hell does talent mean? Talent means finding things in other people that you can't create yourself. Therefore, it's talent. You can't quantify it. You can't teach it, but you better find those people and keep them. And I'm determined to believe that, yes, you have to have a drive and desire to be good, but you also have to know how to think. And not everybody comes into the business with the same philosophies, the same ways of thinking to help them be successful. We all come in with different experiences. And once I've figured out some of this stuff, everything gets easier. But otherwise, you're limited to what I call default thinking, which is whatever you may not even know where you got the philosophy or the idea from. Could have been our upbringing or whatever, and it is what it is. But if we don't know how to think differently, it's going to be the same. So, for example, a lot of people, and I see a lot of this, and I know you see a lot of this on, TikTok and Facebook and LinkedIn, and everybody's pitching their product. One of the things I've learned is that the product doesn't matter. The sale is not made when they understand your product. The sale is made when they understand their problem.
Yep.
So why are we talking about the product all the time? The product is meaningless until it matters. So the product isn't completely meaningless. There's a point where it matters. But until they understand the problem, the product doesn't matter. Why are we talking about it?
Yeah, that's what we taught. We tell them, look, none of these folks ever care what company. They don't care what company they're with. They don't care what the coverage is or what the language is, or they care about none of this. What they care about is the money there that's supposed to be there on time? Does the check clear the bank? Because they have a problem. What they care about is the thing that's waking them up at night, and it sure as hell is not understanding index universal life insurance or spending 3 hours in yours or my office today,
Oh, yeah, I've had so many experiences on that. And at least a couple of years ago, I got so many calls from a prominent mutual company. I won't mention them, New York Life. And what's fun, yeah.
Don't worry, my assistant will not edit that out.
Leave it in there. But there's two big insurance companies that they think that by mentioning their name gets you to the sale. And let's just call them out real quick. New York Life and State Farm. And they're some of the biggest brands.
I throw Northwestern in there as well.
Well, they're the quiet company. No one knows who they are. They're a big company, but really, Northwestern, is that the college? I mean, come on. But New York Life, right there, you have life in the name, so they can assume that you want to talk about life insurance. But what's interesting, New York Life will train new agents to say, I'm with New York Life, I've been paying dividends for 150 years, or a AAA rating, whatever their spiel is, all that stuff that doesn't matter. Now, it's a strong brand, but the brand doesn't matter. The client isn't buying your brand. Now, the client will care about that when it's time to make a purchase decision. Nothing wrong with that. But until then, it's immaterial. So at least I would train these advisors, say, you know what, you can mention your name. You're already with the company. I'm not telling you to leave the company. So I'm with New York Life. What you probably don't know about New York Life is how we help people to, and you fill in the blank. And you pivot to the problems that you solve, not the product, the company history, the dividends. No one knows. Even Ben Feldman said when he would call, he said New York Life, they don't know what that means. And if Ben Feldman's saying it, it's probably a good thing to take to the bank. Say your name, but get right off from that and go straight into what are the problems that you help people solve. What, based on your client avatar, who you do your best work with, what are the problems that they're seeing, and how do you solve that on a favorable basis? That's what your talking should be about. Other than that, the company doesn't matter. The product doesn't matter. None of the other stuff matters until we identify the problems and figuring out how this is the biggest thing I've learned, how they respond to us. When you're convicted with your message and you found your voice, you're going to observe how they respond to you. You're not looking for their acceptance. You're not looking to see, I hope this script is going to work. Screw that thinking. It's about how are they going to respond? You're going to come up with that I mentioned the 5 ways out of business earlier. I want to know, are they squirming a little bit because they realize, okay, I've done a little bit of that planning, but this is big time stuff and I haven't touched any of that? Have they woken up on a Monday morning? Because we know Monday mornings are the time when the most heart attacks happen. If a business owner has a heart attack, what's going to happen to the business? Will the business survive their surviving the heart attack? Do they want their business to still be there? There's so many other things that once you're convicted of your message, you're looking for their response. You're going to observe what they're saying and figure out, is this someone we need to have a good conversation with? Or are they going to say, no, I'm Superman. Everything's fine. Just went to the doctor. Everything's all good. Okay, you missed the point. I can say next, you can own your problem.
So what other language do you find helps agents engage? Because there are those that focus on business owners, but some agents don't have a product to help business owners. Some agents just flat out. So I was born and raised in, I don't know that I'd call it an entrepreneurial household, but it was a self-employed household. I'd been self-employed since before I got into insurance. It's language and problems I don't just sympathize with, I empathize. And I empathize because, like you, I grew up in a house. I almost got divorced because of my entrepreneurial journey in insurance. My wife was amazing. I was being a dick because the money was bad, And before that, it's, we had our struggles. I grew up in a household that was very, very meager most of the time, despite the amount of hard work and effort as a self-employed entrepreneurial person. And yeah, my old man, if he tripped and fell over a curb or whatever and couldn't go turn wrenches tomorrow at his shop, he was the business owner, but he was his number one technician too. And so all these things, and I can empathize with it. I can speak a language. I can hear stories and first person stories. What do you say to the folks outside of that business owner world? How can they develop some conversations that might be relevant to them? And how would they even identify what conversation should they have?
Well, it depends on why are you in the business. Let's start there. And usually it's a form of trying to relieve suffering and making people better off. That's the main thing. Now, I came in before I was on the insurance side. I was in investments with the credit union. So I was selling mutual funds, which was really regular mutual funds, variable annuities, and assets under management. So I know the talking points of all that stuff. Big deal. Now, we used to think that we were, big planners. No, we weren't. We were just doing rollovers. We did pretty good with it, but there's a whole nother level.
Maturing CD printout and then start picking up the phone. Mr. Jones, your CD's maturing. Let's talk about where this money goes next.
We did. But look, in the banking environment, I was very good because before I was at the credit union as a financial advisor, I was at a Wells Fargo bank as a personal banker and bank manager. So I understand how to communicate with my tellers and member service reps, things like that. I ran contests. I said, whoever can introduce me to the most people, I'm going to give you a $5 gift card. And whoever gets the most no's is also going to get a $5 gift card. This is, 20 years ago, $5 almost meant something. But we had contests and things. But yeah, we had the CD list, we had the money market list. And because it was a credit union, we had what they called SEG groups, special employer groups. And our main SEG groups was AT&T and Verizon or SBC, depending on whatever it was at the time. And whenever people would retire, they would usually come to the credit union and say, I've been offered a buyout option. Should I take it? And I'm thinking, where were you 5 years ago? Why aren't we planning for this in advance? Why are you trying to make a 30-day decision right now when you should have been planning all along? So it's one reason that I wanted to change my focus. Instead of trying to get people right when they're ready to retire, I want to get them earlier, maybe get the insurance and such. But I didn't know enough about insurance. Why would anybody in their right mind buy cash value life insurance? At the time, I had no clue. But that's one reason I went to the insurance company. But in terms of why are you in this business, I want to make people better off having worked with me than before. And there's many different ways, but you got to know enough about your product and how it helps solve problems. So for example, taxes. If we look at how does life insurance help with taxes? If you don't understand taxes, you're going to have a hard time understanding life insurance. So let's do a quick example. And I happen to really like this. Let's suppose that we're trying to solve for retirement cash flow and you'd like to have $100,000 a year income. And if you follow traditional advice, you're going to put all of your money into IRS qualified plans, 401k, 453, 457, SARSEP, KEO, whatever. How much do you need to have in a lump sum in order to get $100,000 a year income? Well, you need to first figure out what are the taxes going to be. So let's gross that up by 20%. So we take our calculator, put in 100,000. By the way, I'm always surprised how many financial insurance agents don't know how to use one of these. This is so key. If you don't know how to use one of these things, it's one of my popular videos on my YouTube channel, how to use a HP 12C financial calculator. I think I spent like 10 minutes going over how to use one of these things. But 100,000, you gross it up by 20%. And so you do 0.8 divided by, you need to withdraw 125,000 per year to net your 100,000 based on 20% flat rate. From there, we need to divide it against a lump sum to figure out, we have to figure out what is the safe withdrawal rate assumption we're going to use. Now, I've seen those safe withdrawal rate studies from as low as 1.7 to the classic number of 4%. The most common one is Michael Finca, David Blanchett, and Wade Fowle in 2013. They had the Morningstar report, 2.8%. Let's just round up to 3% to keep the math easy. 0.03 divided by...
Wait. Dave Ramsey says
8% all day.
do you know what's
I already destroyed that myth. If you retired in the year 2000, you would have been run out of money in 16 years. So I already went through that in my podcast.
You know what's crazy I mean, is there's a lot of, I won't say the company, but Primerica agents right now out there pushing a narrative of Dave Ramsey's crazy, but 4% is low. 6 to 9 should be fine. And it's like, what?
I wouldn't put my EML behind those numbers.
People need to take a trip down to Monte Carlo because they'll figure out with a quickness that the math doesn't math.
Yeah. It doesn't work out. And it's just sad that there's certain cult mentalities inside certain companies or IMOs and with other, you have a cult mentality that people will just blindly follow things without studying them out. I will study them out. I'll help someone learn, what the truth is if they're open to learning. But if they're going to say, well, Dave Ramsey keeps saying, look, you can only have one advisor. It's going to be him or me. And here's the difference. He doesn't know who the hell you are. Now, I might not, I'm being bold because I'm talking with you guys. I'd never say it that way to a client. But still, he's not going to have a personal relationship with you. Plus, he has no licenses. He used to have an insurance license. You can look it up in the Tennessee Department of Insurance. But getting back to the math, if you wanted to withdraw $125,000 to net $100,000, and he used a safe withdrawal rate, use 3%, you need $4.16 million for every $100,000 of income. So at that point, that should be like, oh crap, how well am I doing right now? Right? That's what that number automatically says. And if you don't have at least $1 million, gee, you're in trouble if you wanted to retire at a decent level. And if you're thinking, I wanted $250,000 of annual income in retirement, well, you need to multiply that number by 2.5 times. So was that 10 million? Yeah. How are you doing? And when we look at how life insurance can work, life insurance is tax exempt. Now, sometimes I even talk to EAs and they think I'm splitting hairs here, but a tax-free and tax exempt are two different things. Tax-free still generates a 1099 form, and currently under current tax law does not change anything. So you take a distribution from your Roth IRA, it doesn't change anything in your tax calculation. I think that one day it's going to change, particularly for Social Security provisional income calculation. I think that eventually it will do the same thing as municipal bonds, turn your tax exempt income. It'll still be federal tax exempt, maybe state tax exempt, depending on the municipal bonds you have. But they're going to put that back into the provisional income calculation and say your Social Security is now being affected based on how much you have in your Roth. It's not in the tax code yet. I think it's one day it's going to happen. But tax exempt generates no 1099 form. No one even knows you did it, So if I could do the same thing, 100,000, and if we pledge that cash flow against a growing asset, we can actually take out a higher distribution rate. Now, that's going to be a factor of current interest rates based on how the illustration is going to look. I understand. But we can generally model about 6%. So instead of taking out 125,000 at 3%, we're doing 100,000 at 6. What is the amount of lump sum we need in a life insurance policy to generate that cash flow? About 1.6 million. That's less than half. Which one seems a little easier to attain? When I can show that I can improve someone's situation or solve a major problem using discounted dollars in one way, shape, or form and make them better off, the sale is made. The only question is, do they understand the words that are coming out of my mouth? Sorry, I just watched Rush Hour recently. As long as they're understanding the intention and the math and that I'm trying to put them in a better position, the only question is, how soon are they going to understand that this is good for them, or if not? And they don't have to understand. I can move on. I can always say next. They can own their problem. But if I can put them in a better position, can I show it? Can I prove it?
What I love about the last 5 minutes of you sharing this is that, except for a little bit of side banter, you didn't once mention my policy, my whole life policy, my IUL, my VUL, my annuity. You didn't mention any of that. All you did was talk about the math. And what is the math indicative of? The math is literally just the tangibility of the problem they have. That's all it is. So we didn't talk about products in any way, shape, or form. It was just simply, hey, doing it one way, this is what you need. Doing it another way, this is what you need. Which one do you want to work towards? Which one do you think is more attainable? Great. Let's go that direction.
I had a really fun interaction. This was a couple of years ago now, but I was invited to a private briefing on private placement life insurance. And as you know, private placement, they're variable policies, and depending if it's domestic or offshore, we're not going to go down that rabbit hole. But he was showing a case design based on 7.5% each and every year. It was a nice presentation. And afterwards, asked me, David, what do you do? I said, well, I show people how to use, and I'll throw in the name. I use whole life insurance, limited pay whole life, to show people how to retire with their assets off the radar screen of the IRS for income tax purposes. He asked me, what's the rate of return on that? I said, oh, it's negative. And I looked at him in the eye just like this, because I was not ashamed of that. In fact, I'm kind of proud of that. You're going to have a negative rate of return because you might break even right after the 10th year. But I was fine with that. He was a little confused. He wasn't sure what to make of that. He was like, wait a minute, how are you so okay with that? Because I know that the result that I could generate, the amount that's left of the policy isn't going to matter. Now, of course, he came back and said, well, imagine if you could get your clients 7.5% or more. Like, yeah, that's a whole different thing. I can do this for the vast majority of people, whereas private placement, a whole nother ballgame. You're talking about less than 1% of the population where that can apply to. So, yeah. But being able to own that. And the main thing that is the hardest part between those two calculations is realizing that you have more security with less money. That's the weird thing. And I always point out, if I have to do a written analysis, which I even did for my folks, I actually pointed out, this is one of the weak points. You have to be comfortable with having less money in the policy compared to having more money held elsewhere.
Well,
and so that's a psychological thing.
I think that's such an important piece too, because you've always got the naysayers on the other side of the equation saying, well, you could grow so much more wealth. And it's like, but don't you understand, for the problem we're trying to solve, you would have to grow so much more wealth to solve it as effectively. In fact, I hope that it's not so much better that it's just like twice as good. I hope it's 300 or 400% better, because that's what it's going to have to be, right? Versus X. We're just skinning a cat two different ways.
Well, it's
with,
kind of
with the
like,
math. Go ahead.
I was gonna say it's kind of like you could liken it to food. You know, there are foods out there that they're very empty calories, right? Like ramen noodles have almost no nutritional value whatsoever, right? And listen, just let me finish, Carson. You can have this great big wall, this storage pantry full of ramen noodles, right? It's like I have 10 years worth of ramen noodles in there. It's like, or you could have a modest garden in the back that generates caloric, nutritionally dense food, fruits and vegetables, and you could have a farm. It's like, yeah, I don't have a Fort Knox worth of ramen noodles, right? I don't have the quantity, but what I have is much more quality, right? It's each calorie that I get actually has some value to it. Yeah, I think that people get so hung up on the volume that they're trying to accumulate, and it's really more about, look, what problem does this actually solve? If the problem is you need nutrition, is the volume of styrofoam noodles that you have really the biggest problem?
I think you're asking the wrong. The question is, do you have enough sriracha?
Carson, there's not enough sriracha in the world for a vault full of ramen noodles.
I disagree.
I'm not talking about the good ramen noodles. We're talking like the cup of noodles. Like,
yeah.
I'm a Tabasco guy. So yeah, no problem there. But look, I served my Mormon mission, and we spent plenty of time with all the carbohydrates in the world. So yeah, and we, you put a little bit of hot mustard on some of that and fry it up on anyway.
That's the main point. I didn't know you were Mormon or LDS. I was born and raised. Most of my family is Mormon and LDS. So
okay.
Yeah.
Very cool. Yeah. The way, for me anyway, I look at that as, when someone finds that out, I hope they say, okay, that makes sense. I hope that I'm a good reflection of my faith, as opposed to, oh, I didn't know that. Okay. It would be really surprised. So
I think it lines up pretty well. And it's interesting. Some of the worst people I know are Mormons. But some of the best people I know are some of the worst people I know are Catholics and Jews and everything else in between. And some of the best people I know are Catholics and Jews and everything else in between. So I'm not so hung up on that at this point.
Sorry. But let's get back to the math part, because I used to see life insurance as something that you try to sell and you try to find any excuse to sell. And until I saw the math, and I'm going to credit Tom Love and the Breakaway League. They taught this, they championed this, and it's actually lately been incorporated in the Circle of Wealth system. Brian Bloom wrote a book called The Equivalent Value of Life Insurance, and he goes through some of the math on this. But once I saw that $1 in life insurance can spend better in retirement than having $3 to $5 in a 401k or IRA, and I did the math myself. I had to deconstruct everything because I'm an analytical almost to a fault. But once I saw that, I was like, wow. That is something I could get behind, because now I can show people how to achieve their financial security goals and do it with less money, at least in terms of the overall lump sum. When I could be the deliverer of that, that's amazing. And the fact is that most of we'll call it the fiduciary crowd, they don't know this math. They don't know it exists. They don't know it's possible. And unfortunately for the insurance industry at large, the fiduciary crowd thinks that a lot of us are just out trying to rip people off. And in some ways, the insurance industry deserves that reputation. I can't fault that. There's been some major issues in the past. But when we can prove it and put it in writing, you can't beat what we do. It's just, it is so amazing that I see almost no reason to ever get my securities licensing again. Now, I've got a CHFC. I can form an RIA or be with an RIA at any time, not a problem. And if I was going to do it, that would be the way to do it, because I don't like all the compliance oversight from 25-year-old compliance people who think they know stuff. And quite frankly, I probably know more than they do. There's a little bit of my ego showing there. But I want the freedom to market and prospect with a quality message that is accurate. I care far more about accuracy and federal and state compliance than I do about company perspectives, which is why I'll never be with a State Farm, because they have so many rules on their people that they can't even do ethical things with their products because their hands are tied. So I like the independent model not necessarily a network marketing model, but I like just being independent. Show me what the products are, but I've got to find my own training. I got to find where am I going to get the best language, stories, questions to engage with people with the message that I'm convicted of. Because if I can lead with that conviction, the question then becomes, does it serve you? If that conviction can serve you, can I see how this can apply to your situation? And sometimes it might make them, sometimes it might not make them better off financially, but they like it anyway. Okay, twist my arm, son, make me make the sale, sign here, third copy's yours. As long as I can show the potential. I'm so convicted of all these things, with life insurance, annuities, critical illness and such. And there's so many other things in business planning. And I can't believe this isn't even talked about. I have taken, and I knew I was going to talk about this. I've taken LUTCF, Essentials of Business. I have my CLU, which includes planning for business owners and professionals. Damn it, not one person in the entire course of either of those things talked about the impact of not paying bank loans as a business owner. If you die, and there's a bank loan that's outstanding, the bank can foreclose on the damn business, which puts all the rest of your planning, makes it almost irrelevant. And then once I started learning this, I was like, why isn't anybody talking about this stuff? And that's one of the projects I'm working on right now. I have been tasked, and I've been working on this for the past year now, on a business owner consulting designation. And they already had a lot of the content already written. Now, they thought, let's just make us some updates and let's market this thing. And I'm like, no, if we're going to put my name on this thing, we got to make this thing good. And to me, that means let's bring in the mindset. You need a better mindset to work with business owners, because business owners don't have time for nonsense. You got to get their attention. You got to show that you've got something worth talking about. You've got to have the academic knowledge, which they don't necessarily have, but I do. I got it in spades. Now I just got to put it in a format where I can teach it. You got to have the art of delivering on the advice. You got to be able to deliver on it. You got to have a way to share that program, that you have a process, you've got checklists, you are professional. And by doing so, you can command the attention of paying a fee for that advice if we're going through that process. And then there's a whole bunch of other stuff to go with that. So this is going to be a monumental project. I'm doing it in a way, I'm doing it for the person I was 20 years ago when I first got into the insurance side of the business. I wish I would have gotten what I'm doing now. And I'm writing it for that kind of agent, the person who is ambitious, may not necessarily have a huge net worth or network, and they just want to get out there and get a message going. I was just at the NAFA San Diego Small Business Planning Summit, and it was an amazing event, but they mentioned nothing about prospecting. They had no prospecting language at all. If you had an existing business owner client, that's what they wanted you to think of. You could talk to them and say, would you like to maximize your tax deductions this year? We've got a 412B3 thing. Let's go figure out if that makes sense for you. Nothing wrong with that. But unless you already have the relationship existing, you're not going to be able to do anything with that. And the entire industry doesn't know how to prospect. And even in the Facebook group, which I'm thrilled, it's not my Facebook group, but I run it as though it's mine. It's the largest one of its kind that is not affiliated with an IMO or a particular company. And we let just about any conversation happen. But we always get the question, where should I get my leads from? Learn how to have a conversation. Once you learn how to have a conversation and people go, really, you can help me solve that? Let's talk about it. Let's find out if it makes sense. We've lost that edge, and we're trying to make this in a way too easy. And I always look at it this way. If it's so easy to do, why aren't the companies doing it and getting rid of us?
Yeah, they tried. When was it? 18, 19, when Ladder was making its big emergence. They really, really tried to have a done for you online AI driven solution. And what they came back and found was it didn't work. It's that relationship piece that drives this further than anything. AI is just not intuitive enough to have those conversations. And there's a level of empathy. This is a business of empathy. And I like to tell folks, empathy is not seeing that somebody has a problem and feeling bad about it. That's and wanting to do something. That's sympathy.
That's sympathy.
Empathy is true give a damn. Like I feel it because I've lived it. Right. And you just can't replace that. And so you've seen a lot of those companies that were going that direction, reeling it back in and becoming more of a lead generation based company. They're a lead generation and then a technology company. So they'll help with back end processing and installing agents back into the process. So that's been an interesting thing we've seen over the last 5-7 years.
Yeah, because the more you make it automated where you're not part of the picture, then you have to ask yourself, why aren't the companies doing it themselves? And if you're working in such a way that can't happen, you automated yourself out of a job, essentially, because why would the company pay us? So yeah, I try to make sure that you've got to have your voice out there. And one of the things that helped me a lot, I started writing my blog about 6 years ago. Now, I was on an insurance forums discussion site, and every once in a while we get a consumer on there asking a question. And I remember we had this one engineer guy show up, and he's asking that questions about whole life insurance. He just left his Mass Mutual agent's office, and he's asking us about what he was taught. And I'm thinking, okay, that meant no or low trust. And the presentation wasn't good enough because he's got to look for other outside opinions to help him lower the risk of making a bad decision. And I'm thinking, you know what? What if I could just have a blog where I'm challenging some of these things that are out there? And there's quite a few of them. And so I've got over 150 different blog articles now. And anytime that there's something out there, I'm like, I wonder what that would look like. And when I write an article, I'm the biggest beneficiary. It's the amazing paradox of learning is that when you're learning something well enough to teach it, now you own it. And the nice thing about having a blog is that now you can be an author. If it ever comes up to someone, let's say you're working with a prospect or client and they get something like, and this is the favorite one it's one I love to pounce on. The life insurance company keeps my cash values and only pays out the death benefit. That is my favorite one to completely dispel because it's the net death benefit equals cash values plus the net amount at risk minus any outstanding loans. Once we understand the formula, you realize, oh, the cash value is a component of the death benefit. It's not trading out. The life insurance company does not print money. And once I figured that out, I wrote the blog article. Now it's there. And the old phrase is, you can't always believe everything you hear, but seeing is believing. So now if that ever comes up, I can always explain something, by phone, over the phone. And I could say, I'm going to send you a link so you can read up on it later. And this way they can know that I stand behind my word. I can prove the things I'm talking about. And the goal is not to sell from the blog. In fact, Van Miller follows me on social media and stuff, and I would post my blog articles and such. And he actually called me, 2-3 years ago. He said, David, you're not selling anybody with those blogs. Would you like some advice on it? Okay, I'll listen. Anybody that doesn't listen to Van Miller, shame on you. So I listen to it, but the purpose of my blog is not to sell. It's to clear the weeds. It's to make it easier for someone to make a quality decision for their best interest, whatever that's going to be for them. And that's one of the ways that I have become far more studious about this. I've got this reputation of the Google of life insurance. I'm like, thank you. I don't know how to monetize that yet. There's got to be a way. I don't know what that is. But just having these questions that most consumers seem to have, I'm like, let's write an article about it. What is the truth behind it? And then by just sharing the truth, let someone make their decision. So it's been an amazing journey just by doing a bunch of writing. And of course, I've done my podcast over the past year. So my YouTube channel, I've got over 5,000 subscribers on the YouTube channel, which is pretty amazing. I can't believe people listen to me that long, but people are listening and paying attention, and it's generating a little bit of business. Just got a couple of emails the other day for people asking for some advice. So we'll see. That part is a work in progress, but learning through teaching is the greatest paradox. And so that's why when I'm resharing everything through the Facebook groups and everywhere I can, I benefit the most. Jim Rohn said, develop the ability to share. And it's been the greatest thing. And one of the things that Jim Rohn used to say is that, at some point you build up that influence and someone will say, that's him. That's the famous man. People are saying that. When I went down to meet Van Miller for the first time 4 years ago, he was here in Arizona. And I drove down to go see him, and I'm walking towards him. There's David. And I'm like, oh man, he knows me by sight. That's a little scary to me.
When did you see Van in Arizona?
He did a thing.
Is this the thing at Topgolf?
Yeah, Topgolf.
I was there.
21. You were there. Okay, awesome.
I was there.
So
yeah.
This was right before I did a webinar with Tom Love, Van Miller, and Jim Ruda.
That was the Gleaner meeting, right?
Yeah, so he did a Gleaner meeting, but it was right before I was going to do a webinar thing, a Zoom meeting, like 10 days later. And I'm like, this is a chance I could get Van on camera. So I got him for like 2 minutes just to promote that online event. And so that's on my YouTube channel. But yeah, it was there for Gleaner. That was great, just to see my hero in person. And since that point, I've done a lot of webinars with other people, because in the Facebook group, I built that group for me. I'm like, whoever I've ever heard speak, whoever I've read their books or anything, I want to invite them in and let's just see what happens. Tom Hegna's in there. Jim Ruda's in there. Tom Love, who I've heard speak many years ago. And so many others that are just so key in the industry. I'm like, let's just invite him in and see what happens. Sandy Chassel, he's my referral coach. I love the way he teaches and coaches on that. That's why he posts quite a bit. And the whole goal is so that I can learn. And Tom Hegna, thank goodness for him, he put me in his latest book, and he gave me a video thing that basically said I'm a student of the industry. And I think maybe it's some insecurities on my part, but my goal is to be the best I can be, and I can learn from so many other people to develop my own voice. And through these webinars I did, I happen to know the mentor to one of the top agents in the world. And so I met with Sanjay Tolani for about an hour and a half, and we're just one-on-one. Now, if you don't know who Sanjay is, Sanjay last year did 327 times top of the table last year.
Wow.
Just like, really, that's possible? I mean, that is just freaking amazing. And that's like top of the table every single calendar day. Now, granted, he's the royal advisor to 6 royal families. He's massive. But what's interesting is the greatest off for me, and no one will get this from me, but it was the greatest off that I figured out, is that Sanjay does the exact same things every other top producer does. He just has his own mannerism, his own style, but he understands the principles of communication. And once you understand it, now you just find your voice and let your personality show, you're well underway. But you don't get that kind of realization unless you're talking to someone of that caliber that could bring that kind of clarity. Once you have that, like, everybody does the same thing. I don't have to look for the answers anymore. It's like that. I'm satisfied now. Now I'm going to learn from other people. I learned from you, Carson. I learned from you, Peter. I learned from other people, because I'll hear something like, that's pretty good. I wonder if I should work that into something. And you're refining, but you're not searching for the biggest answers. You're not looking for that. Once you find your voice and you're comfortable in your own skin, now you're judging how other people respond to you. You're untouchable. It's just, it's amazing that this side of the business even exists for that mentality. And that's why my industry speech, I'm going to have 2 that I want to be known for. The first was the 7 greatest lessons I've learned selling life insurance. And I'll be talking a lot more about the things I've shared with you, which is the mindsets. Because once you have this mindset, you don't have to go backwards anymore. One of the greatest fears that once you hit success, what happens if something else happens? What happens if I get into another relationship and it ends up with a divorce and I get into a depression again? How do I build myself back out? And if it just happens to be circumstances,
Right.
it's a problem.
Ramen.
Yeah.
Whatever happens, just have some ramen.
That's the Henry Ford model, right? That's the Henry Ford model is, hey, look, if you have $1 million and you lose it all, that's okay, because you know how to make $1 million.
However, if you feel like it was just a fact of circumstances, then you feel like it was a part of luck. Now, luck is nice, but you can't necessarily plan on winning the lottery when you want to, right? That's the problem with luck. When someone wins $1 billion in the super lotto, whatever it is, you're a broke person who happens to have $1 billion. You better be wise with it, because you can't create that again. Now, even if you create it the first time, the question is how could you repeat it? And if you look at his circumstances, you can't repeat it. You got to know how to be able to go back and say, if I have the proper mentality, I can create this again from scratch.
You know what's crazy? In my life, I found the only times I can say, wow, what incredibly good luck. And there's been a few of those times. It was the times I didn't need incredibly good luck. I had already gone and figured it out for myself. I'd systematized my own successful outcome, and now the luck happened, right?
Yes. At that point, it's, what's the phrase? It's the common phrase.
Bullshit? Yeah. Yeah.
No, well,
I've already used that before.
not just that one. I'm thinking the harder I work, the luckier I get.
Yeah.
And that's definitely true. But here's the thing, is that your own resistance comes into play if you don't know how to properly think and have your mind on your side. And so I'm not worried about the no out there. Some people think, I'm afraid of rejection. Hearing no is not the worst thing. Picking up the phone is almost the worst thing, because that's when you're the most nervous. Once you've dialed the phone and it's ringing, if you remember what the ringtone sounds like, right? Once it's ringing, now you got a new thing to think about. But hearing no, that's the relief. Okay, don't have to worry about him anymore. Next is the hardest word to remember. I've read that book, Go for No. No is nice. Next is better.
Yeah, that's the truth. So as we're kind of wrapping up here, you've talked a lot about, or you not a lot about, but you've mentioned a few times things like books you want to write, things you want to do, industry speeches you want to have. What is next for David Kinder? You're always so focused on helping everybody else move forward. What are you moving into?
Great question. So first, I am, in a way, of taking time off. Not time off. I have been focusing on creating this business owner designation. I do not know when it's going to be launched, but believe me, all of my time is focusing on that just so I can get it done, primarily. The good news is I'm at the point where I'm just talking about the academics of everything with it. So hopefully that will be launched. I hope 6 months. You can't quote me on that. I have every intention. I want to get this thing going.
I'm going to the internet after this. Quote me, 6 months. David Kinder.
Yeah, and I'll say, you can quote me all you want, but the IARFC Association says, no, don't put a date out there. They don't want the calls. So there is that designation. I want to get that out there. That's part of that. But most importantly, like I said earlier, I'm learning by teaching, because I have to put all this stuff together in such a way, I'm going to be able to use that and leverage it myself. Taking those 5 ways out of business. How can I help a business owner solve for death? Well, you have that loan cancellation program we talked about. You got to have the family well-being taken care of. What is the business succession planning going to look like? What about estate equalization, plan giving interest? All of that. That's all part of just the death component. Disability. We got to solve for critical illness, business overhead expense, personal disability. All of those factors come into play there. And not to mention life insurance, because the disability waiver premium, that keeps the cash being contributed. Retirement. We have tax exempt retirement, which is what I'm a big fan of, but you also have tax deductible retirement using pension plans like cash balance and 412b3 plans. Voluntary sale. How do we improve the value of the business going forward? And how do we get the most amount for the asking price? How do we keep key people in place using vesting programs and incentive programs to keep people on board so that they will transition with whoever buys out the company? Bankruptcy is the worst one, but it's also kind of a weed check, because if someone says, I want to learn about bankruptcy, okay, you're probably in trouble. But assuming that you're not necessarily in trouble, the creditor protections of life insurance, state specific. I'm in California, there's practically none. But 401ks, IRAs, you can at least walk away with that. Creditors can't attach to it. And being able to solve for those things, there's a huge market for that. Now, I also have the tagline, the tax exempt wealth guy. You see that there with my name. There's 5 ways to solve for that. You have tax exempt retirement, which we were talking about using life insurance. You can do nearly tax exempt retirement using non-qualified SPIAs, where all you have is that taxable portion of the exclusion ratio. Then we could do it using the incentive plan, right? Executive compensation. Let's do it for life insurance. Now it's not an excuse. It's let's give you $5 million value of a 401k in a life insurance policy so that they understand the true value of what their employer is really doing for them. You can set up the business into an ESOP, and you can sell the business on a tax exempt basis. When I heard that, I was like, mind is blown. You can do this on a business scale. Business has to be worth at least $10 million valuation, and has enough payroll to make it worthwhile, because you're going to transfer the business ownership to the employees. Massive opportunities there. Then there's another level above that, private placement life insurance and the Hampton Freeze. And in case, Professor, if you're watching this, I really appreciate your mentorship. Professor Craig Hampton has been instrumental in my learning and growth and such. So those are where I want to take my prospecting and my message. I'm looking at writing a book primarily to help promote the designation that's going to be coming out. We talk about the 5 ways out of business and what the problems are and what possible solutions could be. I'll probably have 2 versions of that book, one for consumers or business owners and the other one for advisors. I also have, but it's coming out probably about 6 weeks. I have a white paper coming out regarding fiduciary duty, because most people do not have a clue what fiduciary duty really means, and none of the lobbyist groups are getting that right. So you got the pro fiduciaries say everybody needs to be disclosing all the commissions and everything. And then you got the annuity and life insurance guys that we're saying we want to preserve our way of doing business. And the fact is they still can't agree what best interest means. And so I've got a 20-page white paper dispelling all that. So I'll give you a quick example. Let's suppose you have a broker who sells C-share mutual funds, and you have an advisor who's selling assets under management. Let's assume the expense ratio is the exact same. And let's assume that the compensation to the advisor or broker is the exact same. Why is one a conflict of interest and the other one is not? And I know the answer to that. The reason is because when you're a broker for a company, that company was setting the compensation. Whereas the advisor, the RAA, they have the direct relationship with the client. They're setting the compensation directly with the client. And when we understand that fiduciary duty is not about comprehensive advice, fiduciary duty is about making sure that your advice is based on, any confidence is based on the source of compensation. So it's not about economic outcomes. It's not about product lines. It's all about where's my income coming from? And if it's coming from any source other than the client, I need to disclose it and get their consent. That's what fiduciary duty is. And most people, and sorry, Tracy, I saw your rant the other day. I'm sure he'll watch this later. Does your fiduciary duty? That's not a fiduciary. A fiduciary is someone who is held out either by law or by a voluntary standard. They're trying to disclose that I've got your best interest at heart, and by demonstrating that, I'm going to share with you what my commission is and get your consent on it. And I think that there's even some insurance agents who say they're fiduciaries and they're not following fiduciary law. And I'm concerned about them, because if they get in any trouble, that standards could be held against them. And so getting that white paper out, just to bring the clarity that no one else is talking about at this level, I want to just keep people out of trouble.
That'd be a great one. I don't know if you'd be open to it, but total side note, down the road, we're working on doing some free trainings inside of our Facebook group, right? And that'd be a great one to do this year. Just if you're open to it, come on and do a free training for everyone. What is fiduciary?
Yeah, we'll do it. Absolutely. And we'll make sure that white paper gets out to everybody too, because I want people to be kept out of trouble. And not to mention, if someone asks you, are you a fiduciary? And you are not, how do you save face? How do you turn that into an opportunity? And my general answer is you can highlight your designations, you can highlight your years of experience, how many clients you have. I consider myself a fiduciary educator. I'm going to help you understand the wealth building decisions you've made. I'm going to help you understand what your opportunities are going forward and what the consequences are of your decisions. My goal is to help you understand all of that and help you make the best decisions possible. What more can anybody want?
I love that. Well, and that's what most consumers feel like that's what fiduciary means. They don't understand that all fiduciary means is I'm going to tell you what I'm going to make, how I'm going to make it, and I'm going to get you to sign here saying it's okay for me to make that. That's really all it entails.
Which is why they called it the prohibited transaction exception form, right? You're not allowed to do this because your compensation is coming from outside the client because it's coming from a third party. But if I get your consent and disclose, now it's okay. Prohibited transaction exception. Most people don't know why that term, why it was called. That's the reason why. Now, at some point, I think some law will be passed that will require some sort of disclosure. And at that point, we should be ready on the offensive. I'll disclose my commissions. But here's the thing. I'm going to disclose what your fees would have been, your lower income would have been, and your potential tax liability according to current tax law. And I'll compare it, and I will be the better bargain with my massive commission. So you got to be able to be ready to go on the offense on that.
Yeah. I've never run into a client that when I explain commissions to them, how it works with me, like I just helped a couple last night with a fixed index annuity that they're retired. They're sick of volatility. It's like, yeah, we can set up some volatility protections for you to make sure that this can get taken care of, right? And the fiduciary standard it's a good standard. It's important, right? It's important to do what's in the best interest of your folks and to explain to them what's going on. I've not ever had a single client in my 13 years when I explained how I get paid goes, whoa, hold on, wait. You're going to make money on this? It's like, well, yeah.
I'm not in the nonprofit business.
Yeah, that's how this thing works, and then there's just a couple little nuggets you can drop along the way. It's like, hey, look, this is the difference between how I get compensated and how other types of advisors get compensated. My compensation comes from the company. It comes from the spread.
Yep.
It comes from company reserves that get replenished by the spread. It doesn't come out of your pocket. So if you give me $100,000 to put somewhere safe for you, on day one, you have $100,000 going to work for you. You give that same $100,000 somebody that does AUM and it's a 1% fee, you have $99,000 working for you because that 1% went to them. That's how they got compensated. And there's not a right or wrong way. It's just how it is.
Yeah. And the contract is the contract is the contract. Yeah. And the contract compensation is designed based on how the contract has been designed. And they think that, we get to increase the compensation slightly. You do more production with the company, they'll reward you for doing so, but it doesn't change the factors of the contract. So if the same contract paid one broker 6% and pays another broker 8%, the contract properties don't change anything. Right. Because the contract's the contract. So yeah, it's interesting that we have to go to the nth degree because we have to defend how we're doing business, even though we're trying to do it the right way, disclosing everything, making sure that consumers understand why this is in their best interest, how it solves certain problems. And yet the industry wants to attack it.
Yeah.
Sorry, I was just going to say,
yeah, go for it, Peter.
When people come with, because I have had friends and family members and clients who have come and have asked, like, well, are you a fiduciary? Like, I'm going to function as a fiduciary for you in a fiduciary interest. Am I a fiduciary on paper? No. But let me ask you, do you know who the most famous fiduciary of all time is? They're like, no. It's like, you ever heard of Bernie Madoff? They're like, wait, what? That guy's a fiduciary? It's like, yeah. It's like, so let me ask you something. It's just like you could take your kid and drop your kid into the worst school in your state. And you know what? They could get a phenomenal teacher and get a phenomenal education because they happen to find this fantastic teacher. Conversely, you could put your kid in the most expensive private school on the planet. And guess what? They could get a crappy education. It could happen, right? Because the quality of the individual that you're working with is really the most important part.
Exactly. Fiduciary duty, I liken it to a restraining order. It just tells you how hard you can sue and it tells them the police where to start looking for the bodies. That's it.
Yeah, I don't have an issue with people knowing what I make. You have no issues paying a realtor, 6-8% between buyer and seller but you have an issue with me making an income? I think not, sir. You don't get to be my client. But also, when a lot of times other professionals, when they say, well, you only make money till you sell something. No, that's not true. I make money one of two ways. I make money if I sell something, and I make money if I solve a problem and a client decides to buy products I have to offer. And those are two inherently different things. And I could go and sell and talk them into things that they don't need. That's where we see persistency issues and chargebacks and all these other issues. I don't have that issue. Why? Because my clients want a solution, and I'm not selling, they're buying the solution to the problem they have from a perspective they own. They haven't
problems, not selling products.
And that's exactly it. So yeah, full circle, we come all the way back around to problems and products. And
which is why Elizabeth Warren needs to quit off of her hobby horse, because she had this whole expose of here's how much conflicts of interest and commissions that people can make for selling insurance products. I destroyed that on a podcast. I was so peeved about that.
Elizabeth Warren doesn't even know, who her ancestors are. I'm not concerned about her and her. It's freaking mom.
All right, but she's got a loud voice. That's the problem. She's got a loud voice. Listen to her.
Yeah,
where's her
voice as she was singing her? What was they were doing their whole?
Oh, we shall overcome. Yeah, we shall on you,
David.
Our industry should be singing that.
If folks want to find you, insurance agents, where can insurance agents find you if they want to learn more? And where can the common consumer, in case they run into this, where can they find you?
So insurance agents, they can join the Facebook group, and we do require that they answer the questions, because I ask them, what's your license and state number? And then are you going to abide by the rules? It's the largest life insurance agent group of its kind. I think Facebook.com/groups/life insurance. Doesn't get any more obvious than that one. I also have another group. It's called for advanced whole life insurance. So there's a slightly product focus, but it's a little bit more advanced conversation when we have those conversations. It's kind of died down lately. So the Facebook group is there. You can find me on LinkedIn. You can find me on YouTube. It's under my podcast name, which is the Financial Advocacy Podcast. Where else can you find me? I'm on TikTok a little bit. I submit clips from my podcasts on there. But also go to my website. That's for consumers and agents alike. They can go to my website. They can see my podcast links and my blog, especially. There's all kinds of stuff there. DavidKinderFinancial.com. So I keep that one very simple there. Yeah, I'm in a lot of places.
Cool, man. Well, dude, I really appreciate your time being. We're going to have to do this again. Well, I don't know why it's taken us so long to do something like this in the past, but I'm grateful for we're here now. So thank you for your time.
Appreciate it, Carson and Peter. Great to re-review and share. And I hope that somebody gets a little nugget out of something that maybe there's something that was blocking. It was like, David said something there. That was good. And it helps to free up, let the oceans part ways so you can finally see the pathway through, because sometimes we're our own worst nightmare, we're our own worst enemy, and we don't even know where. We don't even know where to start looking to fix something until it's pointed out. And it's like, that's it. And sometimes it takes a few of those. So really glad to help share some of that. And yeah, let's get together again. We'll talk about fiduciary duty. That'll be a fun one.
That'll be a fun one. All right, man. We'll talk later. My team will get this all chopped up and posted. We'll get you links and everything when it hits the interwebs. But in the meantime, anything you want or need, or if there's anything I can do for you, or I can't volunteer Peter, but I know
He does all the time. Don't listen. I can't volunteer Peter. Whatever.
I know what's
Excuse of slave labor.
I'm just a volunteer doing what I'm told.
I hear that. No, I just wish I could think quicker to get all this stuff done so I could start making money with it as opposed to writing it. But in a way, it's a great thing, because the more I'm learning it, the more if I have to learn how to teach it, that means I've got to master it myself. So I have frustration in my own learning process, but it is what it is. And I volunteered for that. And it's a whole different thing when a 40-year-old association has asked you to create a designation for them. That doesn't happen to people usually outside of academia. And because, hey, we didn't talk about it, but I did not have a college degree. I did not go to college other than the American college. I did my courses with them. I almost failed out of high school. I was that bad of a student. So having learned how to study since then, because you talk about education earlier, they did not teach me how to study. I know now how to legally cheat on exams. If they hand you scratch paper, you can do a brain dump on that thing, reference that thing during the exam. That's how you legally cheat, because they handed you the paper. But if I've gone to the point where now I'm going to be teaching all this stuff, and I've been writing all this. It's amazing for someone who's not even in academia. So I feel the weight of the pressure on that, and yet the pressure to over deliver. So it's going to be great once the damn thing's done. I feel the pressure.
Well, kudos. Keep on it, and let us know if there's anything we can do to, be a service to you. So
I appreciate that, guys. So thank you. And yeah, we'll do this again sometime, whenever that is. So I'll catch you next time.
Thanks, David.
See ya.
Thank you, gentlemen. All right. Bye-bye.